correct, this is Bell Equipment. So this is a manufacturer and distributor of mining and agricultural capital equipment. South African born and bred, principal factories in the Richards Bay area, but it also has a plant that it acquired somewhere along the way in Germany. So in the 1960s, a guy called Irvin Bell, the founder of the company, invented a three-footed machine thing with a claw on the front, which was used to pick up logs when they were doing timber work. But it's really grown through many iterations. They're a major manufacturer globally of articulated dump trucks. Had a bit of a partner with John Deere. But I'm afraid that's where the good news sort of stops. This is a company that has had a very tough couple of years, does seem to be in a slight turnaround mode, but market cap is right down at 1.2 billion rand, price to earnings ratio of 7.78, not paying dividends currently. IDC had to bail them out,
yes.
Wayne. It was a tough time. There you can see, there's the 5-year chart. It goes as high as 25 rands a share, picked up, down, bounced, hit about 3, now back at 13.
Look, it's a very interesting company to go and study. When the truly tough times hit in 2007, 2008, I mean, they're such a big employer in Richards Bay that they actually shared jobs. They said, listen, either we retrench half the staff or you have half a job and earn half an income, but at least then everyone earns half an income. And the shareholder, the Bell family, put in a massive amount of their own personal money in again to the company to keep it going. And they seem to be doing a similar thing now. You know, they're restructuring. They're very good at coping with the tough times. They truly are. Now, the last set of results, they actually made quite a substantial profit.
Because it turns out they're mostly selling stuff internationally and getting dollars and euros.
So they're heavily
sales.
protected by the 35% fall against the dollar and the 20-odd% fall against the euro. But quite clearly in their statement, they say, listen, don't put too much behind making profits. Our volumes are down. So they are very similar to Barloworld.
The global context that you spoke about earlier, that's what it is, man.
And they are more orientated. Caterpillar is probably more diverse. They are heavy duty machinery in the construction side. And of course, we know construction in South Africa, you know, you're building shopping centers, you're not building roads and dams.
Because they did very well.
They did very well in the
good years. Again, the period of good years.
They couldn't keep up with demand.
Like in the Rustenburg area, we know a guy who was their sales guy there, and he said it was just going crazy.
You couldn't keep up with demand.
Purchases the whole time. There'd be open pit mines opening all over the place. They'd be buying Bell equipment because it certainly made sense. So all of that contraction just puts you in a little bit of a tricky position.
Yes.
The relationship with John Deere, do you have any idea what's... Because they were a shareholder for a while and they were working on a joint venture basis.
Not sure.
Then basically, as I understand it, John Deere said, look, we're going to develop our own articulated dump trucks and there's no longer a joint venture partnership. But I'm not sure whether John Deere still retains an interest in...
I don't know about the shareholding. I know about the deal they had in out and how it came apart, but I'm not sure about the shareholding.
Okay, so hot or not?
Look, this is a heavily cyclical commodity company, but at the moment, as we said earlier on, the commodities might improve, but no one's going to spend capex for a number of years.
So what you're saying is the share price reflects the fact that they are no longer on the relegation list, out of life support, out of intensive care, but they're in the general ward now, not exactly, haven't been discharged yet.
Good times are still a little bit ahead of them.
Okay, not hot. Good.